All right, how we doing, people? Back at it with another Forex Friday.
My man!
Woo! Been a fucking crazy week. For those who are watching markets, I think NASDAQ was up like 8% yesterday. USD pairs getting absolutely clapped. Pretty sure the DXY had its worst day, I don't know, since like 2008 or something crazy. I mean, it was down like 2%. And that trend has been continuing so far. I mean, USD pairs in general just getting absolutely clapped. Now, personally, I think maybe not in the short term, but eventually this will be something to fade just because Jerome Powell is probably sitting in his chair seething right now that the market is rallying. And, this isn't exactly the idea of a tighter financial conditions that he was aiming for. So if you ask me, because the previous meeting he literally said that the terminal rate is going to be higher, meaning presumably that the dollar would go higher, because if you're going to raise rates higher than originally expected, why wouldn't it,
Totally.
Now, obviously, everybody's banking on a pivot because of the CPI data. Actually, I'll just touch on that real quick. I think I have it right here. Yeah, so basically we had inflation unexpectedly come in lower than expected, right? So obviously that's unexpected, but it was, I think, expected to be like 8%, came in at 7.7%. And the market was pleased, especially because core inflation also came down, because even though we had headline CPI peak around here in June, basically 9%, core CPI, which technically the Fed uses core PCE when it talks about its 2% target, but core inflation for CPI was still rising despite headline going down, and this was mostly just because of energy going down. And then you had like shelter and a bunch of other stuff that was kind of adding to core inflation. But we're now seeing that change alongside headline inflation going down. So this is everybody calling an end to inflation, and then as a result saying that Powell's going to pivot.
Right.
But I don't think that's going to happen. I think Powell is avoiding a double top for inflation, or wants to avoid that because that's what happened in the 70s, and that is his playbook. Paul Volcker, the chair during the 70s, is his idol. He loves Paul Volcker. He's a big fan. He's really modeling, to a certain degree, his own policy after him. And one mistake that Volcker made during the 70s was that he thought inflation was going to be over, but we ended up getting a double top. So it kind of retraced after the initial peak to a more normalized level, and then came back with a vengeance. And I think even made a new high. Not saying that's going to happen, but Powell is going to want to avoid that. And here, I have some of the baskets. Actually, I don't really need to get into this, but you can see, inflation in the baskets has also been going down. We had used cars just go down. Actually, we had this one. So you can see consecutive months for a lot of these. Used cars, shelter, food and beverage, they're all going down. So this is partly, if you dive into the actual basket, why the Fed believes that not what the Fed, but why the market is thinking that inflation has peaked. You got all these 3 consecutive month declines in various baskets, in addition to the headline numbers coming down. So, it's a good sign, I guess, in terms of inflation really peaking and coming down, but that doesn't mean we're not going to get this double top, and that is, I believe, what Powell's going to be focused on. So I guarantee when he comes back with the next meeting, he's going to try to put the market back in line.
Little bitch.
Because this is not what he wants. Everybody's just banking on this Fed pivot, and personally, I think his goal right now is to kind of break the Fed put and basically tell the markets that that's not going to happen. But anyway, we'll see. So with that out of the way, let's just get into the charts, starting off with the DXY. Now, obviously, just given everything that's unfolded, everything dollar related has just been on a massive decline. You can see it here. This is a daily chart, so these are pretty sizable candles.
Damn!
So basically what I'm eyeing for, I'm not going to be bullish right now, even though I am thinking that the dollar is probably going to gain for a little bit longer. Whether or not it actually gets to a new high, that's definitely up for debate. I have no idea. That would definitely take a big change, I would say, maybe. But I still think, given that Powell literally said in the previous meeting that the terminal rate, the final rate, basically the maximum amount that the Fed is going to, where they're going to stop basically raising rates. Like the terminal rate right now, I think has been priced in around like 5% or something like that for Fed funds. and he said it's going to be higher than initially expected. And if you're kind of basing foreign exchange rates off of interest rate differentials, that means the dollar probably should go higher. And yet, what did we see the day after Powell announced that? We had that jobs report come out, dollar tanked, and now we have the CPI, dollar tanked. And so even though this data is coming out and that definitely is going to be impactful on the Fed's ultimate decision and their interest rates, he said that the rate is going to be higher and they're going to keep rates higher for longer. So I'm just taking him at his word, right? That's all we can do. I try not to fight the Fed. And so I'm going to keep my eyes open for buying opportunities. Now this chart looks disgusting. It's not something I really want to buy, but if you look at this blue line right here, I would be interested in seeing a sizable candle. I don't want to really see a trickle up. If I see a trickle up, I might be more willing to short off of some sort of rejection of this line right here. Busted through this sell side liquidity, so I would be interested in seeing, for a short potentially, if we have like a little trickle up and then show some weakness and then head down maybe into this demand right here. But if I am going to, for me to be interested in a long for the DXY specifically, I would want to see a pretty sizable candle probably next Monday, just push us higher. I call it like a flip-flop candle, basically a mirror version of this red candle, but a green one. Just push us right back here and then find support at this previous level and then continue into maybe this area of supply before going down or maybe even pushing higher. Who knows? But I do want to see something very convincing. I'm not going to be catching falling knives or trading DXY unless I see something really, really that draws me in. But still, from a macro perspective, I do think that the dollar is going to at least have a comeback. Could call it like a bear market rally. Say this is the actual top up here. Maybe we just get a retracement into supply up in here and then continue this trend lower. But I think eventually people are going to come to terms with the fact that the Fed is going to raise rates more than they're maybe anticipating despite this data, just because they want to squash inflation and they don't want to make the same mistake of the 70s, because inflation went down. Volcker let his foot off the gas or the brake, whatever analogy suits you, since they're tightening and slowing the economy. So took their foot off the, their tightening pedal, and inflation came back with a vengeance. They had to tighten even more, and it was kind of a big problem. So that is literally what Powell's worried about. So inflation going down isn't necessarily going to mean a pivot. Even, if they slow the pace of rate hikes, they are trying to get rates higher than they expected, and they're going to keep them there for an extended period of time. So you just had to keep that in mind. Unless Powell says otherwise, that should be, you should really consider that when you're talking about the DXY and the potential strength of the dollar, because as it stands, nothing has really changed. It's just the market desperately waiting for a pivot and just jumping at any opportunity that says that Powell might pivot, even though he's said time and time again that he is not going to pivot, and he's just been getting progressively more and more hawkish. So yeah, anyway, that's enough blabber about the DXY. I don't really have any specific trade ideas. I'm not even going to waste my time going down to the lower time frames, but just in general, I'd want to see some sizable reaction, push back above this level, and then maybe get a retracement back into here. And then obviously confirm that with lower time frames. But ultimately, I do think we're going to get some sort of bid on the dollar eventually in the medium term, just as soon as the momentum from this rally is lost and people start coming to terms with the fact that Powell is maybe not going to pivot just because of one inflation print. He's probably going to wait for several in a row, and even then he's probably going to keep rates restrictive for a while. So anyway, let's just transition to the next pair, Euro USD. All right, so obviously USD pair had a rally, because of the everything I just talked about basically. So I am looking for Euro USD to push above this buy side liquidity right here into this. I know this isn't a super high conviction supply zone. It's mostly based off of this buy side liquidity because we're riding this momentum. So I would like to see basically more or less what this blue line is signaling. So just a push above this buy side liquidity into this quasi supply zone, and then maybe a retracement, because this is a pretty aggressive move. So even if this is start of a larger trend that eventually heads all the way up here or higher, I'm assuming we're going to see some sort of retracement counter trend retracement into demand. And right now, this is the only area of demand on the daily chart. Now I'll drop down a little bit closer to the 4 hour first. Yeah, we already busted through this and didn't really see much of a reaction. Actually, I'll just get rid of this. Whoops. But I do really like this level. This level right here. So busting through, get some, basically grab any liquidity from stops on this level. And we're almost there right now. I mean, we're approaching it right here. So I will be watching this closely. And again, this area of supply that it's kind of confluent with isn't necessarily, screaming a supply zone. It's not that obvious. You could even really extend this all the way to this whole area of kind of like quasi consolidation. The only thing that gives me a little bit of cause for concern is that they have relatively equal levels right here, right? So if I move that back, get that back over. There we go. So if you look right here, we have some buy side liquidity on this in this area right here. These kind of relatively equal levels. I suppose you could say this last one kind of busted through it, but still, we got these equal levels, and that's more that's confluent with this more obvious supply zone, kind of like a more obvious high, right? And one that led to a pretty strong reaction. I suppose this did too, but we kind of tested this area a little bit, but doesn't mean we can't still have any liquidity left over to drive it down, at least in the interim, maybe to that area of demand. But if this doesn't play out, this kind of blue line that I have, I would be looking for just a continuation, up to basically push through this buy side liquidity, and then a push back down into whatever demand is formed, if there is any. Maybe we consolidate in this area of supply, in which case I might be looking for long. So we like push in here, and then we find support, and then we could push up into this area of supply, bust through that buy side liquidity, and then kind of get that retracement back down into maybe this area of demand or whatever demand forms. But consistent with kind of my my macro view that the dollar is probably going to gain. I mean, nothing really has changed but the euro. The euro is or Europe in general, they're kind of in a bad situation, and I don't see that the secular trend necessarily changing. I mean, the dollar is still the reserve currency, so notwithstanding any rate things, I mean, if the Fed pivots, Europe's going to pivot too. So even in relative terms, like if they both pivot and they stop raising rates, I still think that the dollar probably would gain against the euro longer term. Now, obviously, we're talking about short-term trades, not holding the euro for several months. But I'm just saying, at some point, I would say it makes sense to fade any euro strength. It's just a matter of identifying what that point is. And I love that we're seeing all this strength, because the higher the euro goes, the higher my conviction will be for shorting. If it's medium conviction here, it's slightly higher conviction here, and then say we get all the way higher, maybe up to even like this level or something, that would just add to my conviction probably that we're going to see some sort of sizable retracement. Whether or not we get all the way down to the low, I don't know. But I still think, we're getting too caught up in this short-term idea of the Fed pivoting. But like, trust me, if the Fed pivots, everyone's pivoting. If anything, the Fed will be the last one to pivot. You could say they already are the last one to pivot, given the Bank of Japan has been easing with yield curve control. The UK already kind of engaged in like quantitative easing by intervening in the gilt market to backstop their pension funds. And you have the EU doing their, what is it? They have like TIP. I can't remember the acronym, but basically they're managing the spread between the German, the German bonds and the Italian bonds, and which is, a form of quantitative easing. They're raising rates, but like they've already kind of bent the rules around actual monetary tightening. So a lot of people would say that they have already pivoted, but the Fed has not. So, if the Fed actually pivots, they're going to pivot even harder. Nobody's going to, out tighten the Fed. So in that sense, I really don't see that the euro is going to have many headwinds or tailwinds pushing it higher in the medium long term. But obviously there's a lot of momentum right now, and this could take us higher, possibly even all the way up to bust like this buy side liquidity, in which case I might just look for like a deviation trade, right? We trade above, maybe we get like another top, and then we start fading, and you could even wait till we break below this and then get one more kind of confirmation back into this area of supply, or this, this previous high, and then ride that all the way down into whatever demand. I'm definitely open to all of it. I'm not going to let my longer term bias kind of influence me in too much, but in terms of, like, I guess I'd be interested in taking longs if it proves itself. If we push above here and kind of find support in this area, then I might look for a long up into here. But I still would prefer to do a short. That way I can have a higher time frame level take profit. But yeah, basically, I know I'm kind of rambling, but this area right here, where price is almost here. Actually, let me just get rid of some of this stuff so it's a little bit clearer. So you can see price is right here. We're almost busting through this high, which I definitely expect. It's just a matter of whether or not we push through and reject kind of right away back into demand and then continue the trend, or if we really have that much momentum, or we can find some sort of support up here and then continue. And ultimately, though, this is my higher conviction idea, where just because I like this level right here, busting this liquidity, and it's consistent with this area of supply, that I don't know, it's just gives me a little bit more confidence than this area of supply. But yeah, that's in my Euro USD thoughts in a nutshell. Nothing too crazy. Just gonna see how this momentum carries out. Just because this can't last forever. At some point, we're gonna have to see some sort of retracement. It's gonna be incredibly overbought. Maybe that's somewhat driven by short covering or whatever it is, but eventually, markets can't go in a straight line up forever. So I think wherever the liquidity is, whether that's here or here, we're going to see some sort of, at least I think, going to see some sort of retracement. May not be a huge retracement, but still, I'd be looking for those opportunities to short. Anyway, let's transition to USD JPY. Now, this is another one I'm only including because it's USD JPY. It's a huge pair, huge cross, but I don't know. I'm not really that interested. This is kind of like the DXY to me right now, where I'm not really interested in taking any trades. I did talk about, I think last week, eyeing this area as, demand makes sense just because it's a pretty sizable low. This is like the liquidity event, or not liquidity event, but the intervention, the original one. So in some sense, there's like a catalyst behind this low. So could have added to your conviction to go long, basing that off of like the low, because we got a high, or this low that led to this high, and then you're going to make a higher low. So that was the idea. Now obviously that didn't work out, largely because of the CPI thing, sending price in the wrong direction, for that trade. And I'll be the first to admit I wasn't expecting the CPI print to come that below expectations, nor did I expect it to have such a reaction, even if that did happen. So I'm definitely trying to be open to the momentum going down, just because we broke this low, so that is a big deal. Probably going to make, if the structure continues, going to be making a lower high somewhere. Who knows where that is. I do really like eventually this level right here. You could say we have a lot of inefficiency in here. And again, that doesn't mean we're going to trade to a high, although, I wouldn't throw it, I wouldn't say that's an impossibility, just because you can see a lot of volatility in this, especially if something crazy happens with the Bank of Japan, or the Fed just comes out and says, like, I don't really give a shit what the recession or factors are, like, we're hiking rates to 8%. I mean,
And we say bye-bye.
I don't know if they'll get that high, but it really depends on inflation. But either way, I'm just saying it is possible, and I would love to see this inefficiency filled. But in the short term, kind of similar to the DXY, I would want to see a sizable reaction. Next week, a push above here, grab this buy side liquidity, maybe find some support right here, and then continue higher, maybe into this area of supply. Now, again, not necessarily saying this is going to happen or anytime soon, but I guess for a short play, also like the DXY, just be looking for some sort of, retracement back into this level, and then a rejection of this, basically like a deviation back into this range here, or I guess more accurately, like this range right here. So a deviation back into that, and then just rejecting, and then get it on some sort of pullback in this region to take it lower. I'm not really that interested in it, especially maybe next week, depending on how price action develops, but obviously not on a Friday, because I'm not going to hold that position over the weekend, as stories can develop when you can't get in and out. But yeah, so again, I don't really have any specific trade ideas for USD/JPY. I just wanted to include it because it is USD/JPY. But I am kind of staying on the sidelines for a lot of these USD pairs until I feel like the market has exhausted its short-term euphoria, and maybe there'll be some sort of economic report that comes out that kind of shifts people's perception. But in the short term, I am mostly trading the like non-USD pairs like Euro, GBP, which I'll get into, and other things like that. But yeah, so let's transition, because obviously it's not too exciting if I can't have or offer any specific trade ideas. So this one is a little bit better. So this is GBP USD, and now last week I talked about this. So we traded into this higher time frame supply, right? And that was originally where we saw this reaction, went lower, and then we had this low, higher high, higher low, higher high, higher low, and then we failed to make a higher high. And so that's why this was my area of supply that I that I outlined. And I also pointed out that we had some relatively equal levels here as some buy side liquidity, and we it played out perfectly, right? So we traded, busted that liquidity into the supply zone, and then started making had a sizable reaction down lower. But then this right here obviously stopped me out of the trade, but it was unexpectedly because of the CPI thing. Now, had the CPI come in higher than expected, obviously it would have probably been all the way down here. But what are you gonna do? It's the nature of the game. But either way, so that was kind of the structure I was basing this off of, and it did work out until this catalyst entered in the market and kind of fucked me over. I mean, I got stopped out of break even, so not a huge deal, but still, now I'm going to be looking for sales somewhere higher. I do like this area right here of buy side liquidity. Got a lot of inefficiency in this area right here. Mostly just all selling, right? No buying, hence the inefficiency. And so I would be interested in seeing some sort of peak above here, really just bust this previous high, and then maybe show some weakness. Basically exactly what this blue thing is, more or less. So this is the first idea. Now you could base it off of this actual high, and again, this isn't the cleanest supply. Maybe if you get to the daily, it makes more sense. So it's not the cleanest area of supply, but I still haven't mapped out just because we did see a pretty strong reaction. So you could, and it is, oops. So it is, an area of supply, I suppose. The only thing I want to point out is you have these almost equal highs, not quite there, but basically what this tells me is there is potentially a lot of liquidity right here that price would gravitate towards. So maybe we get a push all the way up here and then get that retracement, because similar to the Euro USD pair, obviously we are going higher with pretty strong momentum, but when you have such an aggressive move higher, even if you're just getting a little pullback, like it's going to retrace eventually. So it's probably when it's going to be met with whatever liquidity, hence breaking above this, being met with liquidity, and then going back down, maybe retracing into this area of demand. Or we maybe just push higher all the way into the supply, do the same thing, or even just continue all the way up to bust this buy side liquidity and then go down. So I'll be eyeing all of that just in case, because I want to I do want to get a longer term short. But if we're talking about longs, I would be doing shorter time frame ones, just watching price action and targeting those same levels, right? Actually, let me go 1 hour. Now this is a little close. I don't know if I'd be taking longs right here just because the risk reward would be maybe a little off, but you could. I do like potentially eyeing this level, so we can see price retrace down to here and then continue higher like that. So basically just bust the sell side liquidity and seeing continuation. Now you could just play it off of like having your entry somewhere in this region, That definitely does work, but it's also safer to wait for confirmation. So you see that that run of the sell side liquidity, and then a pushback into the, call it this range, and then look for a higher low, right? So this being the low, you just look for a higher low, even if it is below, as long as you get that higher low, you just base your stop off of this. So the risk to reward would probably be decent. And then you just target either the previous high, or you can target this area buy side liquidity. I always have those as my targets. Let me get rid of this. Yeah, so shorter term, I would be looking for some sort of pullback, maybe run that liquidity, and you never know where it's really going to land. That's the issue of just placing your entry anywhere over here, basing it off of the run of the liquidity. But yeah, like I said, so you'd probably want to wait for some sort of confirmation before hopping in, like around this area, and clear invalidation wherever that low lands. But that is my short-term potential trade idea for for going long on GBP. But still, I would be primarily eyeing this area of buy side liquidity to see how price reacts. If we get some sort of consolidation here or start showing some weakness and then heading back down, in which case, then you could be eyeing this previous, this level or this level of demand. I do like, let's see, let me get down a little bit lower. Right, so we were making these lows, right? This is the actual low, and then we started this counter trend. Let me get rid of this. Need that out of here. Yeah, so this is the low. We started making highs, higher lows, higher highs, higher lows, higher highs. And then this is where we failed to make the low. Obviously, we didn't get a reaction, but I guess you could say you could base it off of this, right? So we pulled back into this area of demand. Make it green so we're not confused, right? Pretty perfectly. Pulled into this area of demand and shot up. So we were making low. So this is the high, low, lower high, low, lower high. And this is where we failed to make a lower low. So you can say this is our new area of demand that I would be eyeing. And given how close these are, depending on what your target is, just to, for the risk to reward purposes, you could base your stop off of this area of demand, again, just to play it safe. But this is where we did not, we were in this counter trend structure going down, and then we failed to make the lower low right here, right? So, we made that high, and instead of trading below this level, instead of trading below this level, we moved up and then had a higher low and then this rocket higher. So that's the area, that's the reason I would eye this area demand. But like I said, if you're, depending on where your target is for risk to reward purposes, you could base your invalidation off of here. I don't know if it would be ideal. So the way I would look at it is, if we don't trade above, don't run this buy side liquidity, so we basically retrace from here, then I might be more interested in taking it long all the way to that buy side liquidity. But if we do run the buy side liquidity, I might have a second thoughts about taking it long, just because we're kind of potentially reaching a higher time frame objective, especially if we traded into like this supply and then headed lower. But yeah, so nothing too crazy, just looking for some sort of deviation above the buy side liquidity right here, potentially a deviation below the sell side liquidity too for a short-term long up to that buy side liquidity. But right now I'd be more concerned with the higher time frame trade of just looking for that retracement or just fading this this move higher, because we are still in, actually get even higher time frame perspective, we are clearly still in a downtrend until I guess you probably base it off of this high, right? So we clearly in this downtrend, and like I kind of just said, this is roughly the high that you could say that would be like the break of structure, right? Because we're going low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. And we kind of, I guess where are we right now? It's hard to see. Yeah, we're right here. So you could say this is like this A-B structure, right? So you got A, B, oh, whoops, A. I mean, this is like a, when you have these tiny moves higher, this tiny retracement, it's not necessarily a like a meaningful high to base, like, you know, structure wise. So, you know, we trade down here, we break above it, it's like break a structure. It's like, it could be, but just given this is such a small retracement, I don't know if I would really consider that the high. So for most intents and purposes, I would probably base it off of this level right here. So until we break above this, I would still be bearish, you know, in terms of higher time frame structure, and, you know, hence kind of looking at this supply zone as the potential pivot point, where we, you know, run into here and then retrace. But yeah, so I mean, I don't know how many ways I can say the same thing, but basically looking for this inefficiency to be filled, run the buy side liquidity. So you could, you know, if you're really trying to play safe, you know, you have your stop there, but then it complicates the entry. You can move it to the bottom of the supply, then you're good. But, you know, whatever suits you. Yeah, that's what I'd be eyeing. So let's transition, because I think I've spent more than enough time on this pair. All right, so got Euro GBP. It's a little bit more exciting now that we're finally out of the some of these USD pairs. Let me go to the daily real quick. Always get that higher time frame perspective. So this is a clear example of this kind of A, B, C structure. I often call it like the three stooges, right? So we have this, I mean, this is the capitulation, like from the gilt market thing. So we started really changing our structure because we were in this uptrend, pretty clear uptrend, and now we're in a pretty clear downtrend after this massive, I mean, look at this wick, that's insane. So we are in this downtrend, right? So we have this high being A, really came back down, made a lower high, this being B, came back down, made a lower low, and now this is C, right? So this is a frequent pattern you'll see. Basically runs the liquidity of the B top, but doesn't run liquidity of the A top, right? So it trades between the A high, and the B high. And so that's where we are right now. We saw this big reaction in the supply, right? And so now we're having like a slight retracement. And now that could mean that we are just going to be headed higher, bust above this level right here, maybe get the deviation trade, in which case, you know, you just look for a deviation back below and maybe find some weakness in this supply zone, and then continuation lower. Or the opposite, maybe you find strength in here and you just wait for that, right? But as it stands right now, I would be looking for sells because the structure is bearish, and generally speaking, this ABC structure is you know, reliable. So let's drop down to the 4 hour. You know, so we traded into that higher time frame support. I mean, demand or supply. What the fuck am I saying?
You're a fucking idiot.
We traded into the higher time frame supply, and this being, so this is A, this is B, and this is C right here, right? And we had this strong reaction. So clearly a lot of sell orders in here, and this retracement is possibly just going to be one more test of this zone, right? So grab any leftover orders and then just continue lower. That is probably my base case right now. So now that doesn't mean like we do have this, you know, this short-term swing high right here that has buy side, you know, representing some level of buy side liquidity, and you know, so we could fill some, you know, the rest of this supply zone right here, right? So trade up to here, run that liquidity, and then go lower. Now, if that doesn't mean it, I don't necessarily think that is going to happen, but I would prefer to play it safe. So, you know, if you prefer that trade idea, then this order would make a little bit more sense. You're basically having your stop, your invalidation level based off of that previous high, assuming that there is enough a sell side liquidity or selling liquidity, not sell side, selling liquidity to prevent that from making it high. And then actually when I get down to lower time frames, it'll make more sense where this this blue zone is. It's a, you know, maybe zone, I guess, but a supply zone nonetheless. But higher time frame, I would personally favor this order more, just because you're basing the actual invalidation off of this, the A high, right? Because if you are playing this this A B C structure, it's not going to trade above this level right here, the A high. And so that's why the stop would be there, and the target would just be a lower low, because you know, if we are going to remain consistent with this bearish long or higher time frame structure, then this is the low that we would be trading to and below, right? So basically this sell side liquidity, which is kind of consistent with this, are in line. So you can tell we have a lot of potential liquidity here just because of these relatively equal levels. So that would be roughly the target, right? And I like to have my risk to reward, I mean, usually at least 3, but in this case, I just bumped it to 4. So invalidation here, and I just pulled the stop back a little bit. So it's still below this high. So if we were making a lower high, it would be consistent with that. But let me drop down to the lower time frame, make a little bit more sense of all this. So, we're in this counter trend, I guess, right? Because higher time frame bearish, but we're in this counter trend, uptrend, pushing higher. And then, so we got this high, got a low, and ultimately made that swing high, right? And then we started making a low, failed to make the higher high right here, right? So these green candles are the area of supply identified because we were in this uptrend and we pulled back. And instead of making a higher high consistent with that counter trend, we just went below. And now we didn't bust through here, but you could still say we are making, it's kind of a shift in trend, right? I mean, we traded below this area of demand and below this area of demand. So that is why I would be eyeing this level, right? So for a retracement somewhere into here and then a continuation of this trend. And this is largely, again, based off of this assumption that we are in higher time frame supply, the C, in relation to the A, the supply zone from the A peak over here. So we pull back into this, retrace into this area of supply and then continue. And that, again, is this order. Now, I'm hesitant to take that just because I would prefer the higher conviction trade of basing my stop after off of the actual invalidation level right up here. And even with that, it doesn't mean we have to make this higher high, right? Because the entry is a little lower. And the entry right here is basically right at the top of that supply zone. So you could, some people are basing this, a lot of supply and demand traders, they're eyeing the same thing, right? They see this area of supply, they're looking for price to come in, and then maybe what it does is just a classic deviation running liquidity where it goes just above and then heads lower. And so that's partly why I would prefer this, just because it's a little bit safer. Now, it doesn't mean I'm going to get the entry. It definitely could play where it just barely touches into this area of supply and then heads lower, in which case this order would obviously make more sense. But, like I said, I'm just more partial to this one because it's the higher conviction invalidation level. But in both cases, first target would be this sell side liquidity right here. Wow, that was a perfect line. That's crazy. But yeah, both initial targets would be this sell side liquidity right here, and then higher time frame, like I said earlier, just targeting a lower low because that's presumably what's going to happen if this downtrend, higher time frame downtrend, continues.
Yep.
Okay, I think that's enough Euro GBP. Let's transition to what's our next one? GBP Swiss franc. So we got G Swiss up in here. All right, so let me go higher time frame real quick. So as you can see, we traded into higher time frame supply. And we had this like a range, right? It was a range, and then we left it, came back in like right here, right, to kind of, I guess, grab a little liquidity, but then just headed way lower. And now we came all the way back into this area of supply and clearly saw a reaction, right? So higher time frame supply, target met, right? We got into that higher time frame supply, and now we are pushing lower, making lower highs and lower lows. Actually, we get down to the 1 hour now. Okay, so you can see, this is just pretty classic, like supply and demand trading, right? We're just making higher highs, higher lows, trading into supply. So you can see right here, this area of supply, we came down here, made a low, came back up in here, didn't trade above the high, made a lower high, and headed lower. Oops, screen's lagging a little bit. Yeah, and headed lower, right? So supply zone, met it, didn't make the higher high, headed for a new lower low, based off of that. And then we retraced into that supply again, right? So this area, we had this counter trend, right? Making higher highs, higher lows, made a high, made a higher low, failed to make the higher high, right? So that is technically the area of supply right here. And if you draw this, I'll keep it green just so it makes it a little bit clearer to see. But as you can see, the perfectly wicked into there, right? Now, if the risk to reward is forgiving enough, I suppose, I will base I can widen the supply zone, make it a little bit bigger like this. So basically base it off of these, these totals, or this bottom of the buy candles all the way to the top, which is what I did. So even though technically this is the area of supply, right? Because we, are making these, so we retrade or went down from here, right? Made a low, and then we started making higher highs, higher lows, higher highs, higher lows, higher low, didn't make that higher high, and then we headed to break structure again right here, right? Just confirming the downtrend. So that's why this was the area of supply I was identifying. Perfectly traded into there, but again, I based the trade off of this this zone just to be safe, because the risk to reward was like I said, forgiving enough based off of my higher time frame target. But yeah, we traded into there, into that supply, and now we made another lower low, right? We're currently there right now. Now you could, I wouldn't be surprised if we traded all the way back into this supply again, right? But I suppose you could. Now I don't really like this price action that much in terms of supply zone, right? So let's just kind of repeat, rinse and repeat. So we had this downtrend, right? And then we start the counter trend this way. Should get rid of this arrow. So we had this low, made a high, made a higher low. I'll just count here. So we made, and then this high, and then a higher low, failed to make the higher high right here, and that's what led to the us breaking structure and just heading south, right? So you could say this area right here, what is this, the 1 hour? Now this is kind of similar, I guess, to the previous one, where you could base it off of like from this green candle to this green candle top, or you could just tighten the zone a little bit and base it off of this last buy candle. So this is an area of interest. I would be eyeing for a retracement. The hell is this blue line I got down here? Oh yeah, it's not really ideal. Let me just get rid of that. Yeah, so I would be interested in seeing price potentially, might trade a little bit lower, but then ultimately retrace back into this supply and then continue. But like I said, I also wouldn't be surprised if we did a kind of like A, B, C structure, right? And what does that mean in the context of this specific price action? So this would be the A, come back down. This would be the B, come back down, and then we get C somewhere in this region, trading into this area of supply again, and then heading lower once again for a new lower low. Wherever this may land, just lower than that.
Totally.
And higher time frame, I am eyeing, that's why, this order right here, I'm eyeing this area of sell side liquidity, right? Because, really, you maybe could even target lower down into this higher time frame demand. But if we are, in this bearish structure right here, which clearly we are, and we traded into this higher time frame supply right here pretty perfectly, we're already seeing the reaction headed lower, making lower highs, lower lows, then, I suppose you could assume that we are going to trade eventually all the way down to retest that ultimate low. But just given this reaction, I've talked about this a lot, when you have such crazy price action with such a massive demand kick in from like liquidations or something, just a lot of like high level demand entering the market, that often signals a higher time frame low or bottom, or I guess top, depending on which pair you're looking at. So I guess target one would be this sell side liquidity right here, which is what the order is targeting, and target two could just be this area of demand. Now this demand zone is kind of big, annoyingly big if you ask me. But yeah, I think that does it for today, unfortunately. If
But
price does
as
get there,
always,
maybe
I hope that helps.
longs, but just
Stay happy,
humble, be hesitant,
and most
see, like,
importantly,
reaction.
solvent. I'll catch you all next week.
And we say bye-bye.
Day by day right now, and just focus on this. So this trade right here. could see this right here trading into that supply that I outlined on the lower time frame. Now, that doesn't mean it's going to happen. We could just see a complete, like a failed retracement just because there's not enough strength in the market for it to go up even into that supply. So obviously totally possible, but yeah, those are the areas I would be looking out for. So let's keep the ball rolling. Unfortunately, got another USD pair. Hopefully this one is better. Maybe shouldn't have included this. What are we in the 4-hour chart? Okay. So I like this area. Actually, let me just outline this demand zone, right? Because we're almost in this potential demand. So let me just outline why I think it's demand. So we, and again, this is a 4-hour chart, so relatively higher time frame perspective. So we were in this uptrend, and then we started this downtrend, right? Or this counter trend, I guess, not downtrend. So we had this high, and then we made a low, made a lower high, lower low, lower high, lower low, and then we made a higher high, you know, based off of this. Not higher. Did we get higher than this? Can't tell. But either way, so we pushed higher and failed to make that lower low right here. So that is originally why I identified this level. I suppose you could look to this as your ultimate like invalidation level, but you know, this is the push higher where we failed to make a lower low. You know, because if you saw this and then push lower, you'd say the structure was probably, you know, intact still. So this is where we failed to make the lower low, and instead we just made the higher highs. So that is why I identified this as the area of demand. Now, take it with a grain of salt. I'm not going to, I don't know if I'd be really excited, I suppose, to take a long right here. Definitely not on Friday. Again, I really want to see how price develops going on Monday to see if this momentum is going to carry on, or, you know, like if I kind of alluded to earlier, if people are going to come to terms with like the Fed not necessarily taking its foot off the tightening pedal, as it were. But anyway, I would be looking for some sort of reaction similar to this blue right here, and then eventually attacking this this buy side liquidity. I really like this level. I would love to see liquidity run eventually here. So, you know, if you do see a strong reaction, right, I would then look for, you know, maybe that pullback and then target this buy side liquidity. And then if and when it gets to that area buy side liquidity, you could, you know, basically this order right here, because oftentimes, like all too often, I mean, it's why I like this as one of the strategies I use. You just see price push up, just run, you know, a pretty clear level of liquidity, and it just barely, sometimes it'll literally be by like a tick, like 1 pip or something. It'll just be like right there, just run liquidity. Actually, if I get this order out of the way, you can kind of see, but even like less so than this. So maybe let me get that out of the way too. So something like this, like sometimes you will literally see it just run it perfectly. Now, obviously other times you can see it run much higher. So you want to have at least maybe a breathable stop, but there isn't really a close level of supply. So I found in my experience that when you don't have a close level of supply right there, because, you know, this is what I would probably consider the supply zone, right? Because it's the last like huge buy to sell candles. So this is the area of inefficiency, more or less. But, you know, when you have these huge imbalances like this, oftentimes you just see just a little push to grab that liquidity, and then the continuation lower. So I would be eyeing that if and when we do get to this area buy side liquidity for potential short term, you know, just targeting whatever area demand may develop. Or I suppose you could be targeting a low if you think it is going to be headed lower, maybe all the way down to this area demand if it doesn't get there. But yeah, so in the short term, I would be eyeing to see the reaction on this level. I don't know if I'm really convinced enough to start taking longs right now. Maybe want to see a reaction and just enter a little bit later. Maybe if we see like those higher highs, right? And so we get this strong reaction, make a low or a higher low, make another higher high, and then look for some area of demand for a pullback, and then target up into this buy side liquidity. So that's probably what I'd be more interested in terms of longs, not necessarily catching the falling knife, even if this demand does hold. And then obviously, like I mentioned, just eyeing that this push deviation above the buy side liquidity, and then some sort of retracement into demand or even a lower low, depending on how things develop. But yeah, so let's transition. Got our last Forex pair. So this is GJ. Let's see, why did I include this one? All right, so clearly in a counter trend downtrend, right? We were in this, I guess, higher time frame. Let me get the daily chart first. Yeah, kind of a messy chart, dude. This is just like, what is this? This is so wild. This is Forex pairs recently just have been trading with such unbelievable volatility. It's pretty wild. But anyway, so we're in this uptrend, right? And right now we're in a counter trend, technically. We get back down to the 4 hour. So we had this high, and now we're making low, lower high, lower low. So I suppose the assumption would be, right, that we are going to make a lower high again. And so we are headed down, right? And we made this low, and then we started this counter trend, right? Making higher highs, higher lows. Let me get down to the 1 hour that we can actually see some of these lows and highs being formed a little more clearly. There we go. Yeah, so this is the low, and we started making higher high, higher low, higher high, higher low, higher high, and then we broke structure, failed to make the higher high. So that's why I have this outlined as our area of supply. And we already kind of, like, right, if you can see here, we kind of retraced into this area, right? Doesn't mean we won't come back, and I would like to see these levels, see these relatively equal levels too. Again, that's kind of like a good confluence to have, basically additional buy side liquidity, right? So I would like to see, oops, you know, price run that. It's kind of a mess right now. If I make it a little bigger, there we go. Yeah, so something like this, right? I would like to see price, maybe not like all the way up there, but you get the picture. Basically, I would like to see price catch a bid in this area of demand, right? Actually, let me go back kind of like with the, what was the last pair? USD CAD. So we had this downtrend, right? I'm going to outline, whoa, where did we just go? I'm going to outline why I have that as the area of demand, just so we are all on the same page here. So uptrend, counter trend, uptrend. That's step one, right? So we have this high, we're making lower low, lower high, lower low, lower high, lower low. It kind of ran liquidity here, but still, even if you count this the high, we made a lower low, right? And then we now this is you could consider this right here. So it gets a little tricky sometimes. It's not always clear cut because right, we pushed higher and then we failed to make a lower low here. So you could say this is the area of demand, and I'll actually map that out just so we can get a good picture, right? Just base it off of the sell candles. But this is a little short-lived, right? So you know, you gotta, I guess, stay open to whatever the potential demand zone is. But yeah, so we had this low, and you could say this was the high, right? And this is where we failed to make a lower low. Again, it could be either of these, so I would be eyeing both. But this is the one we're closer to, so this is the one I'm most concerned with right now. At least it's seeing a reaction. And then we made the high. So this is the area of demand potentially, but also, you know, keep this one in mind. But anyway, with that out of the way, we are trading into that area, that first one, the higher one of demand right now. And you can see we had a pretty strong reaction with this wick. Now, obviously, price could still completely head south, which is why I'd want to see maybe a little bit stronger reaction. Just because it isn't, you know, when you have these conflicting ideas, right? You're like, is it this demand? Is it this demand? Unless you're basing it off the lower one, you know, because if it's the final one, then you can kind of have a little bit more conviction. But usually if you know, I don't have the highest conviction in the demand zone or supply zone, whatever it is, then I would like to see more of a reaction. You know, you don't catch it at the absolute low, but you wait till it gets the, you know, starts changing that structure, you get the high, and then you try to find the area of demand that was formed here for you to continue that trend up. But in the, let me get rid of some of this nonsense. But in the short to medium term, we got this area of buy side liquidity I would like to see run, but ultimately this area right here. I really do like this because we got equal levels and it is confluent with this area of supply that I talked about just like a minute or two ago. So more or less this blue line right here is what I would be looking at. Maybe, you know, you can kind of ignore the ending part of this, just focus on mostly this part right here. So we find a bid and demand right here, push above, at the very least, this area of buy-side liquidity. And then if not, all the way up to bust this buy-side liquidity, trade into this area of supply, and then continue this trend, right? Now, let's see, where are we? Yeah, now we could trade all the way down, like higher time frame, all the way into this area, right? So this is, again, this is a British pound pair, so all of them are going to have like something similar to this because of the craziness with the the whole gilt fiasco. And I identified this. My screen's lagging a little bit. Identified this as the area of demand, so we came down, made a lower high, right? So you say this is the high, right? So lower high, and then we made a higher low. So I suppose you could say actually get that widen the demand zone. Now with all these British pound pairs, the demand zone around the gilt market area is just incredibly, frustratingly like large, just because it had so much volatility. So I guess you could base it off of that. Now when you have these big zones, I'm not trying to catch a knife and play it off of here. This is a general idea. Don't have like this as an order in or anything, but that ultimately could be the higher time frame demand zone that we trade into. And again, consistent with the sell side liquidity, like I would love to see price maybe push into this area of supply like I'm talking about on the lower time frame. Let me get rid of some of these. There we go. Clean it up a little bit. All right, so basically, I think I got rid of the supply zone. Doesn't really matter. So basically, trade into that lower time frame supply zone that we were talking about in this area right here, right? So this blue, and then maybe eventually continuing all the way down to retest or trade back into this higher time frame area demand and bust through at the very least this sell side liquidity. Maybe we just trade just right here and then catch a bid and then head higher. So this would be the ultimate target, I would say. So if you were basing it off of, get our supply zone back in here. So if you're basing it off of this supply zone, right? And again, this is because we had this counter trend making higher highs, higher lows, and then we made a low, failed to make the higher high. So this is our area of supply. So I'd want to see price run this liquidity into the supply zone, and then my target, I suppose, higher time frame. Now, obviously, you can have multiple targets, and you probably should. First target would just be wherever the low is. So say we bounce from here, your first target would be this low, and then you could have a second target of, I suppose, either this like quasi demand zone I outlined earlier, or just this sell side liquidity, right? Because we have these equal levels right here. I would love to see price run that, even if it's just a little bit, and then it pushes back up. So let me outline that with an order. So basically enter right at where the buy side liquidity is in the supply zone. Invalidation. If you're playing a high time frame, you can actually base it off of this like real high, which is maybe helpful, or you can tighten it to the actual supply zone, per your discretion, obviously up to you. So first target would ever be wherever this low ends up being, which as it stands right now is roughly here. Otherwise, you could target the higher time frame sell side liquidity right there. Pretty decent risk to reward. If you're doing that, you might as well just bump the invalidation up to there, to this actual high, because you still got a 4.5 hour trade, which is really good. But yeah, those are my thoughts on GJ at the moment. So we'll see how this reacts if we catch a bid in demand. I would like to see that, just because I do want to see it trade into the supply zone one more time, but not necessarily going to happen. I mean, for all we know, there isn't enough strength, and maybe we just trade into this kind of lower time frame, short-term supply, just go like that and then continue lower. But my higher conviction trade would be trading into this one, and hence this order. But yeah, that's GJ in a nutshell. So let's transition to our final one. We're going to cover Bitcoin. This is definitely the week to talk about it because of all the crazy FTX shit going on. So let's get higher time frame real quick. Hopefully we'll save the best for last, but I don't know, this price action has been a little muddy to say the least. So actually, let's go even higher. I know we have this crazy volatility. I mean, these are daily candles. This is absolutely wild. So let's get the ruler out.
That's what she said.
Just so we can see this drop. So from this peak right here to our low, call it 30%, pretty wild. Where we are right now, about 20% down. And significant thing to keep in mind is we left this daily range, right? We've been trading in this range for a long time. Be clear if I get the line right. So we've been trading in this range for some time, and now we deviated from it. Now that is not a good sign at all, because usually, I mean, just look at all these previous examples, right? I mean, there's no denying that this is the high, right? There's no denying that we're in a clear bear market, clear downtrend. So there's no reason to expect that things are going to change, especially with what just recently unfolded. This could be the last leg, certainly, but just keep this in mind, right? So we have these ranges, and then we push down. Like once we deviate, actually, let me get. Okay, so we come down. This is just classic with Bitcoin. We go down, we make a low, right? And then we trade in a range. And then as soon as we break that low, it's usually bad news bears, and we trade, make another low, trade in a range, and then if we break it, it's just another leg down, and that's what's happening right here, right? So we're in a range. This has been a long-term range, right? And we break below the initial low. So my base case right now is that we are going to be, get rid of those. You're going to be finding a low somewhere. Who knows where it ultimately is? Maybe all the way down, 10K, 13K, who knows? But we're going to be trading lower and then into another range. And maybe that is like the real accumulation stage. Really depends. Kind of has to evolve with the whole macro landscape and everything. And then, maybe we eventually start trading higher from there. But right now, we just broke this low. Not a good sign because, if we're just basing it off of the previous price action, whenever that happens, it usually means we're going lower, consolidating, and then maybe even heading one more leg down. Now, as it stands right now, I'd say this is maybe the last leg down. Definitely don't hold me to that. But I think just given where we are in the cycle and just how low Bitcoin has gone already, I think, not that we can't trade lower, like I said, to like 10, 13K or whatever it is. I'm just saying that I think whatever the ultimate bottom of this leg is, I would say there's a good chance that is the actual bottom of the bear market. And again, definitely don't hold me to that. But that is just like what I'm thinking right now. But that doesn't mean we can't go much lower. Higher time frame, I've been eyeing this area right here, right? So this area of demand, because actually, let me just do this, that we can get a perfectly straight line, because this is not a good sign, right? Have we not traded there yet? Okay, so we still got the, what is it, the 2017 high, or 2019, is that what it is? 2019, absolute high, right? So we haven't really traded there. I wouldn't be surprised if we retested that, because if you consider, get rid of, actually, yeah, this is the 2017 high. So this is, yeah, that's what I was talking about. So this is why it's not, I don't like where we are right now, because we just traded below this, right? And so we have a lot of, like a big air pocket, right? A lot of inefficiency in here. And so for that reason, I would not be surprised in the slightest if we traded at least down to this level, kind of consistent with this area of demand, right? So I am definitely, like if you were looking to accumulate spot Bitcoin over time, I would be looking for anything in this region. So we got, what was it, 13K to 10K, basically. Kind of what I just said earlier, I guess. But yeah, that is where I'd be looking for the, I guess, the low of this leg down. At the very least, testing this level right here to fill this imbalance that we had. And you could say that this wasn't exactly fill because it was just all buying, all no selling. And so you could say there still is a lot of inefficiency in here, right? Now let's get down lower time frame, because that's obviously something that would develop over several months that we're talking about right there. So in the very short term, with that higher time frame stuff out of the way, I really want to see price come back up into bust through this buy side liquidity, even trade into this area of supply. And then I have a session volume thing. It's not on right now. Actually, I think I can turn it on. So this is the session volume. It's just like a different kind of volume indicator basically. And so this is the point of control, just like at the point where the most volume kind of enters the market. You can see I had it outlined here too for yesterday's price action. And we're seeing a nice reaction here, right? And it's consistent with this area of demand, right? So I would like to see this react, push higher, bust through this buy side liquidity, possibly trade into this area of supply, and then head lower. Because again, I do think Bitcoin is going to be head lower. If not, I mean, even if this is the absolute low, I think it'll at the very least retest it. So I'm looking to fade strength if it comes all the way up here. Definitely want to sell it and target a lower low at the bare minimum. And I do like this area of supply a lot just because we have this like classic flip-flop candle, right? This big buy candle to a huge sell candle. See these like mirror images, and that's usually a sign of like some type of like manipulation at like a large scale, like institutions or whatever. Algos doing their thing. Let me get rid of this session thing, kind of muddies things up. No, why is it green? Let me get rid of that. Yeah, so that is what I'm eyeing right now. I want to see price come back. At the very least, let me get rid of these arrows. At the very least, trade above this buy side liquidity. So maybe we just get a push higher right here, get a little deviation, and then I'd be looking to sell on weakness, holding below this level, right, down to a new low. But I also would love to see it trade into this area of supply. So I have this zone. Why is this? Yeah, so I wanted to keep it like a 4-hour trade. I guess if you want to be have the real invalidation level, it's this. I tightened it because I don't trade with less than 3R. I suppose you could just move this up. But yeah, per your preference, whatever works for you. I'll probably adjust as I see price develop. This is not, I don't have this order in yet. I'm just kind of like, this is my idea right now. I really want to see price come up, and I'm also open to to this right here, right? So we make this high, deviate from the buy side, right? And maybe we show weakness, we come back in. And usually I like to wait a little bit because sometimes you see this like little double top, right? So you get like this, and you push up one more high, and then you start making the showing weakness, and maybe this is your entry in that case. So I'd be eyeing this deviation above that buy side liquidity, and then if you do see the double top, let me get rid of this. If you do see the double top like that, once you see two, usually that's a good sign that is maybe the short-term high, at least if it's going to end up being a valid trade, in which case, you can enter here and have your invalidation just be wherever that high is. So I would be eyeing the deviation trade, but I also really want to see Bitcoin trade into this area of supply after busting through that buy side liquidity, because I would have even more conviction for trading it short. But yeah, that pretty much does it. I think that's all I have for you today. But yeah, on that note, stay happy, humble, and most importantly, solvent. I'll catch you all next week.
And we say bye-bye.